At the 4-day CannaBliss SVG 2025 festival, industry experts and policymakers took a deep dive into the complex web of international cannabis trade laws, highlighting how these restrictions continue to hinder the region's full participation in the global market. Both St. Vincent and the Grenadines and St. Lucia, however, have taken proactive steps to navigate around U.S. trading constraints, particularly those tied to the use of U.S. currency in an effort to protect and grow their emerging cannabis industries. St. Vincent and the Grenadines has gone a step further, establishing a legal banking framework that allows traditional cannabis cultivators to operate openly and securely, a move many see as a major win for legitimizing the regional cannabis economy.
We did a special procedure with one of the banks in Canada and established a relationship. And so a big part of it is because the government was the major shareholder of the bank. So made a decision, a policy decision, that the bank should develop that legal banking. For other banks, because their governorship may be overseas or international, they couldn't do that. Your Scotiabank, your Barclays, or whatever, you might have, they would have difficulties doing that. But we basically were able to establish it, and many of our farmers and so forth are able to move monies from Europe and so forth and things like that in a seamless way. However, they're not supposed to use U.S. currency.
Chief Executive Officer of St. Lucia's Regulated Substances Authority, Dylan Norbert Inglis, explained that both St. Lucia and St. Vincent and the Grenadines benefit from having a regional parent company for indigenous banks, a key advantage that enables them to implement measures to circumvent U.S. trade restrictions, unlike countries such as Barbados.
In the case of St. Lucia and St. Vincent, their national banks are owned by the same company. So ECFH owns the majority share of Bank of St. Vincent and Bank of St. Lucia. So the conversation with regard to banking cannabis funds becomes a lot easier in the case of St. Lucia, where we can refer to the parent company for this bank, which is already allowing for cannabis funds. In the case of Barbados, it's somewhat different. So because of that, they would not have had the same ability to speak to the parent company of a national bank to say that is being done in this jurisdiction. The OECS would be somewhat different to how you deal with Barbados at its own central bank.
Inglis further added that there have been ongoing conversations as to how the OECS can lend support to islands met with this hurdle.
We've looked at some of the entities that do share jurisdictions. So in our case, we may have some banks that are also in Barbados to see if it can work in St. Lucia and they can join with Bank of St. Lucia, Bank of St. Vincent, Bank of Barbados, if it can then become a regional approach, then Barbados will be able to benefit. But if it is that the persons in Barbados or the companies in Barbados remain resolute that they do not want to take that step, then there's nothing that we really can do.
The cannabis industry faces the challenge of keeping its profits restricted within local economies. But as one panelist noted, this limitation could actually present a golden opportunity for growth and reinvestment at home.
I know it's a challenge currently in our industry, but I like to look at it as a positive. It's the first time that the profits from our industry cannot leave your jurisdiction. In every other industry, the money leaves our jurisdiction. So while, yes, we want to fix it, let's benefit from the fact that the investment, the profits, has to stay within your territory.
For Choice News Now, I am Chelsea Austinay.